Hi students. So my name is Shravan Kumar and I am the faculty for accounts and indirect taxes. So I am going to upload GST Fasttrack classes. So for CA and CMA students who are going to appear for May or June 2025 exams. So I am sure each and every corner of the GST in your syllabus I am going to cover. Okay. So coming to our first topic. Basics of the indirect taxes. And first of all, what is meant by tax? So, tax is a nothing but it is a compulsory burden imposed by the government. So, on the public. And why that levy made by the government? Because government required to provide some developmental activities to the public. And what type of developmental activities means government need to provide some infrastructure and security or a defense required to be provided, some hospitality services, educational services. So these all activities required to provide by the government. For that purpose, government require the amount, and that amount is collected in the form of taxes. That's why tax is said to be one of the major revenue of the government. And generally, these taxes are classified into the two types. One is direct tax, and another one is indirect tax. One is the direct tax, another one is indirect tax. And first of all, this classification of the taxes into the direct and indirect is made based on the two factors. One is incidence of the tax, and another one is impact of the tax. So, incidence of the tax is nothing but the effect on the person on whom the tax is levied by the government first time. So, first time on whom the tax is imposed by the government, the effect on that person is said to be what incidence of the tax. For example, Mr. A earned the income during the current year, then central government levy the income tax on that party, and that effect on that person is said to be what incidence of the tax. But coming to the impact of the tax, so impact of the tax is also nothing but it is an effect on the person who is ultimately bearing the tax burden. Who is ultimately bearing the tax burden is called as what impact of the tax. For example, in the previous example, Mr. A earned the income, then central government levy the income tax on that party. So then that party has to pay the tax to the government itself, and no person that amount whatever the amount earned by the party will be utilized for his personal consumption and will not be transferred to another person. But coming to the trade cycle, manufacturer produce the product, then central government levy the tax on the manufacturer first, then that manufacturer so collect that amount from the distributor, then distributor collect that amount from the retailer, wholesaler collect that amount from the retailer, and retailer collect it from the ultimate consumer. And here the incidence of the tax is first on the manufacturer, and later it shift from one person to the another person until the product reaches the ultimate consumer. So in that way, impact of the tax is maybe on the same person who is paying the tax or not. So based on these two factors, so if both are on same person, then that tax is said to be about direct tax. Or if incidence of the tax is on one person and impact of the tax is on another person, then the tax is said to be about indirect tax. Tax is said to be about indirect tax. And the best example for direct tax is nothing but income tax. And in case of indirect tax, two taxes are there, and one is the GST, and another one is the customs duty. GST and custom duty. Then, what are the differences between direct tax and indirect tax? And as we discussed here, impact of the tax, sorry, incidence and impact both are on same person. Here, both are on different persons. Different persons. So here, incidence of the tax is on one person and impact of the tax is on another person. And here, the tax burden is not shifted from one person to another. So the person who earn the income is only liable to pay the tax. So there, the taxpayer and the tax bearer both are the same in case of the direct tax. Here, taxpayer and the tax bearer both are the same. The burden to pay the tax is not shifted from one person to another person then. But here, the tax burden is shifted from one person to another until it reaches the ultimate consumer. Until it reaches the ultimate consumer. For example, first tax is levied by the government on the manufacturer. Then manufacturer ship the product, sell the product to the distributor. Then the burden to pay the tax is also shifted from the manufacturer to the distributor, from there to the wholesaler, from there to the retailer, and from there to the ultimate consumer. Here, the burden to pay the tax is shifted from one person to the another person until it reaches the ultimate consumer. So here, taxpayer and the tax bearer and both are the different. And first tax paid by the manufacturer, but he is not bearing that burden to pay the tax. He shifted that burden to the another party. Ultimately, who bear the tax burden means ultimate consumer. Ultimate consumer. And another one, the direct tax is progressive in nature, but indirect tax is regressive in nature. What is meant by progressive and regressive? In case of the direct tax, so slab system is there. So central government levy the tax based on the income earned by the party. The more income is earned, more tax is levied by the government. Less income, then low tax is levied. Zero income, no tax is levied. Zero tax. But coming to the indirect tax, so that type of differences are not considered. Each and every person from the eye of indirect tax will be the same. So, if you purchase the product, you have to pay the indirect tax to the government. And if even CM or PM purchase the product, then they have to pay the tax to the government. Even beggar purchase the same product, he has to pay the tax to the government. And every person is liable to pay the tax irrespective of their income. That's why we call indirect tax as what regressive in the nature. But coming to the direct tax is a progressive in the nature. And uh, and in case of direct tax, there is a direct pinch on the person and there is no direct pinch. Means what? In case of indirect tax, the main beauty is every person is paying the tax at the time of purchase of the product or receiving the service without knowing whether they are paying the tax or not. But in case of direct tax, every person is know. For example, if I and the income, as my income increases, I know, so my tax liability is also increases. So there is a direct pinch on the person who is earning the income. But in case of indirect tax, only few person know the fact that they are paying the tax to the government. But a majority of the person they don't know whether they are paying the tax or not. And that's why Indirect tax is the major source of revenue to the government when compared with the direct tax. So, on an average, 60% of the revenue is collected only from the indirect taxes by the government. So, there are two types of the taxes as we discussed. So, one is the direct tax, and another one is indirect tax. So, in case of direct tax, the person paying the tax to the government directly bear the incidence of the tax also. But in case of indirect tax, the person paying the tax to the government collect the tax from the customer. And incidence of the tax is shifted from one person to another person until it reaches the ultimate consumer. Here, the tax burden is shifted. But the direct taxes are progressive in nature, but indirect taxes are regressive in nature. And best example is income tax, and here the GST and custom duty. Okay. Then coming to the next one, what are the features of the indirect tax? So indirect tax, as we discussed, these are the major source of revenue to the government, and it is levied on the commodity at the time of manufacture. It is levied on what commodities at the time of manufacture or purchase or sale or import thereof. Hence, it is also known as commodity tax, and it is levied also on the provision of the services. And simply is nothing but indirect taxes are imposed on activities relating to the goods as well as the services. And the third one, this is important. The payment of the tax burden is shifted from one person to another person until it reaches the ultimate consumer. So here, as we said, the taxpayer and the tax bearer both are not same. Both are different. And the burden to pay the tax is shifted from one person to another person until it reaches the ultimate consumer. Okay. And another one, value of the indirect tax generally inbuilt in the price of the commodity. Most of the time, taxpayer pays the same without actually knowing that he is paying the tax to the government. Thus, the taxpayer does not perceive a direct pinch while paying the indirect tax. As we discussed, in case of indirect tax, majority of the persons paying the tax without knowing the fact whether they are paying the tax or not. But that in case of direct tax, every person know the factor. So as their income increases, the payment of tax to the government also increases. Indirect taxes are what inflationary in the nature. And why they said inflationary in the nature? Because it increases the price of the product. And indirect taxes, we are promoting the social welfare. We promoting the social welfare. How they promoting the social welfare? And the government said we are imposing the more taxes on the sin product. Sin goods stands for those products which are harmful to the health of the human being, like alcoholic product and tobacco product. So as the tax increases on the respected product, the price of those product also increases. So due to that, as the price increases, the demand for the product is decreased, and automatically consumption is decreases. Indirectly, they are promoting the health of the human being by way of reducing the consumption of this type of sin product. But the background music is, so as the prices increases, so these are all what habituated products. As the price increases, they will purchase the more and more number of units. So when compared with the regular scenario, so indirectly they are saying we are promoting the health of the human being. Okay. Indirect taxes are what? Regressive in the nature. Why we said it is regressive in the nature? Irrespective of the income earned by the party, the taxes are imposed by the government. That's why we said it is regressive in the nature. But coming to the direct tax, those are progressive in the nature. Okay. So, what are the features? First, indirect tax is a major source of revenue to the government. And second one, here the tax burden is shifted from one person to another person until it reaches the ultimate consumer. So, there the taxpayer and the tax bearer both are not the same. And the third one, indirect taxes are inflationary in the nature as it increases the price of the product. So, and another one, and indirect taxes are not having any direct pinch on the taxpayer without knowing the fact they are paying the tax to the government. And indirect taxes are promoting the welfare of the public by way of increasing the tax rates on this in product. And indirect taxes are what? Regressive in the nature. So irrespective of the earning of the income, they are levying by the government. Okay. Then, so in indirect tax, our first, our concept is GST, and these dates are not required for exam purpose. But remember one thing, and GST was introduced on 1st July 2017. So to whole India except Jammu and Kashmir, and from the 8th July 2007 onwards, it is also applied to the Jammu and Kashmir. Now GST has been applied to whole India including Jammu and Kashmir. So, what is meant by GST? GST stands for what? Goods and service tax. Goods and service tax, and it is a tax on supply of goods or services or both, except the tax on supply of the alcoholic liquor meant for human consumption. And remember, alcoholic liquor meant for human consumption is completely outside the purview of GST. So, but if the alcohol is used in medicine like cold syrup or cough syrup or anesthesia, and these type of products are there, but those are called in the market as a medicine, not an alcoholic product, and those are covered under purview of GST. If only the alcoholic liquor meant for human consumption like wine or beer, etc., those are only not covered under GST. And first of all, GST is nothing but what? It is a tax imposed on supply of goods or services or both. And remember, this is a nothing but the supply of goods or services or both is a nothing but it is the incidence of the tax, and which is the base for what? Taxable event. Taxable event. In indirect tax, in case of GST, the incidence of the tax is nothing but what? Supply. Incidence of the tax is nothing but what? Supply. Then, what is meant by supply and the detailed discussion about the supply will cover in the next chapter. And first, coming to here, supply are classified into the two types. One is intrastate supply, and another one is interstate supply. Intrastate supply and interstate supply. And in case of intrastate supply, if location of the supplier and place of supply both are in same state or same union territory. If the location of the supplier and the place of supply both are in same state or same union territory are said to be about intra-state supply, and those are liable for CGST and SGST or UTGST. And there are different components of GST are there and will be discussed in few minutes. For example, if the location of the supplier is in AP and the place of supply is in AP, then it is covered under what? Intra-state supply. And if the location of the supplier is in Delhi and place of supply is also in Delhi, is covered under intra-state supply. The location and the place both are in same state or even in same union territory. But coming to here, if location of the supplier and the place of supply are in different states or in different union territories or in one state and another in union territory, those are said to be about interstate supply. And the location of the supplier and the place of supply both are in different states or both are in different union territories, or one is in one state, another one is in another union territory. So then that supply is said to be about interstate supply, and which are liable for IGST, integrated goods and service tax. For example, if the location of the supplier is in AP, but place of supply is in Tamil Nadu, that is covered under interstate supply. And the location of the supplier is in AP, and the place of supply is in Delhi, is covered under interstate supply. And the location of the supplier is in Delhi, and the place of supply is in Jammu and Kashmir, are covered under interstate supply. So the type of the supply, either it is intra or inter, purely depends upon two factors. One is the location of the supplier and the place of supply. If the location of the supplier and the place of supply both are in same state or in same union territory, that is covered under intra-state supply and is liable for what? CGST, SGST, or CGST and UTGST. And interstate supply, where the location of the supplier and place of supply are in different states, are in different union territories, are in one state and another in union territory, are covered under interstate supply and is liable for what? IGST. Liable for what? IGST. Okay. So intrastate and interstate. So here IGST stands for Integrated Goods and Service Tax. It is approximately the sum of CGST and SGST and is levied by central government on all interstate supply. What is meant by intra and what is meant by inter we discussed. Okay. Then one more component is there, nothing but what? Compensation cess. Nothing but what? Compensation cess. And there are few components of indirect taxes are there, and out of that we discussed what is meant by CGST, SGST or UTGST and IGST. But another one is compensation cess. So coming to the compensation cess, and previously before introduction of the GST, means before 1st July 2017. So while we were in old indirect tax region, for example, if the one person supply the goods from AP to the Tamil Nadu, and this is covered under interstate sale and is liable for CST, called as central sales tax. Central sales tax. In case of the central sales tax, they followed origin based taxation. There are two types of the tax structures are there. One is the origin based taxation, another one is the destination based taxation. In case of origin based taxation, the government or the state from which the movement of the goods have been started is levying the tax. Here the movement of the goods has been started from AP, so AP government is levying the CST. AP government is levying the CST. So then the amount is also collected by the AP government. And previous CST is a central sales tax. It is administered by central government but collected by the state government. But coming to the current GST, if the product is transferred from AP to the Tamil Nadu, it is covered under interstate supply. As we said, location of the supplier is in AP, but place of supply is in Tamil Nadu. Different states are there, and is liable for IGST. And in case of GST, they are following what? Destination based taxation. Destination based taxation, and here the state where the product has been consumed, the state to where the product has been transferred. So what is the ultimate destination of the respected product? That government is collecting the tax. Here the movement started from AP, but the product has been consumed in Tamil Nadu. The product has been transferred to Tamil Nadu, so Tamil Nadu government is collecting the tax. And due to the introduction of the GST, some governments are losing their revenue. And because of the change in tax structure. And previously they are following origin based taxation, and the later they are following what? Destination based taxation. So due to that, because of the change in tax structure, some governments are losing the taxes. So especially the manufacturing states, some governments are losing the taxes. That's why the central government is introducing the concept called as compensation cess. And whatever the revenue they lose because of introducing the GST, that will be compensated by central government to the corresponding states. So for over 5 years, and later it has been extended. Okay, it is levied on both intra-state supply as well as an interstate supply of notified products only. On every product, compensation says as is not levied. Only on notified products, nothing but pan masala, tobacco, aerated water, and motor cars, etc. And coming to the motor cars, on an average, 28% of the compensation cess has been levied, and with a view to provide the compensation to the state government for loss of revenue or implementation of the GST. Because previously we are following the origin based taxation, but later we shifted to the destination based taxation, and because of that some governments are losing the some states are losing the revenue. So for compensating those revenue only, this compensation cess has been introduced. It applies to both intrastate as well as interstate supply. It provided to state government for how many years? 5 years from the date of implementation of GST, and later it has been extended by GST Council. So till we now it has been extended up to what 31st March 2026. 31st March 2026. Okay, then coming to the next one. In India, we are following what dual GST. Dual GST. What is meant by dual GST? Dual GST stands for both central government and the state government are levying GST simultaneously. Both central government as well as the state governments are levying, because in India we are having what three-tier federal system, and we have three types of the governments are there: central government, state government, and local authority. And before introduction of the GST, every government has their own power to levy the taxes as per the constitution. And later, as and when the GST was introduced, so uh, India adopted what dual GST. And there are a number of GST models are there. Central model is there, state model is there, dual GST model is there. But India adopting what dual GST model. And GST is a destination based taxation, as we discussed previously. In case of CST, we are having origin based taxation, but coming to the GST, it is a destination based taxation. As the product transfer from one state to another state, or one union territory to another union territory, along with the product, the tax revenue is also shifted. So completely to the product where the destination place is there. The government in which the product is consumed is ultimately collecting the tax relating to the GST. And GST is a consumption based taxation. So as we discussed previously, in case of GST, first it is levied on the manufacturer, later that amount is collected from the distributor, and later from the wholesaler and from the retailer, and then to the ultimate consumer. As the product shifted from one person to another person until it reaches the ultimate consumer, the tax burden is also shifted. And who is paying the tax ultimately? The person who consuming the product. That's why it is called as what consumption based taxation, and it extends to what whole India, including Jammu and Kashmir. So as we said, it is a dual GST model, and both the central government and the state government levy the taxes simultaneously due to the federal structure, federal nature, like Brazil and Canada. We adopted the dual GST model from these states, from these countries. Okay. Then coming to the next one, first of all, why the GST was required? Why the GST is required? Because there are number of drawbacks and number of limitations in previous indirect tax systems, and for curing those disadvantages of previous indirect tax system, so we central government introduced a GST. And what are the drawbacks of previous indirect tax system? And first one is non-integration of VAT and the service tax cause double taxation. And actually, there is a one word called as what cascading effect. Cascading effect. What is meant by cascading effect? Cascading effect is nothing but imposing the tax on the tax, and it means the price of the product is increased due to levying of the tax on the tax, and imposing the number of taxes at a time on the same product at different stages, and due to these two, price of the product has been increased and is called as what? Cascading effect. For eliminating the cascading effect at the state level, we have one word called as ITC. At the central level, we have another word called as SENVAT. We have called as SENVAT. And ITC has been applied only for VAT, and SENVAT has been applied for excise duty and the service tax. And in case of state level, some more taxes are there like luxury tax, betting tax, entertainment tax, which are not covered under VAT. And their cascading effect is not eliminated. So, but there is a combination of VAT and the service tax. For example, we produce the product. We produce the product. So, while producing the product, central government levy the excise duty, and we sell the product to the distributor. Then, while transferring the product to the distributor, then state government levy the VAT. And whatever the VAT we collected from the distributor is not eligible for claiming ITC. And later and distributor transfer the product to the wholesaler transfer the product to the retailer, and they at the each stage they are collecting the VAT, and whatever the VAT they paid at the time of purchase is claimed as a reduction from the VAT collected at the time of sale. And by using that concept called as ITC, so cascading effect has been eliminated. But in the initial stage, whatever the excise duty paid by the manufacturer to the central government is not eligible for claiming input tax credit from the VAT, because central government is paying to this. Excise duty is paying to the central government, but VAT is paying to the state government. That's why both are not eligible to set off. And the same thing is applied in case of VAT and service tax. So, in the present region, restaurant service provider is liable to pay VAT on sale of the food and service tax on supply of service. There is no set off because VAT is relating to state government, service tax is relating to central government. It means VAT is not allowed as input tax credit against service tax and vice versa. When the same version is applied in case of VAT and the excise duty, and excise duty is applied only up to the distributor stage and the manufacturer and distributor. After that, excise duty is not applied. Then whatever the excise duty they paid till the distributor stage, after that it is forming part of the cost of the product only, because it is not eligible for claiming this VAT credit by the subsequent parties, and subsequent parties paying the VAT only. And while calculating the VAT, that VAT is imposed on the price of the product, which is inclusive of excise duty. So tax is imposing on the tax, because of that price of the product has been increased, and that concept is called as cascading effect. And no VAT credit after manufacturing stage to the dealer. And there were several indirect taxes are there like luxury tax, betting tax, entertainment tax, which are not subsumed under VAT. Hence, for single transaction, multiple taxes or multiple forms were required to be paid. And the existing indirect tax framework in India suffers from various duties and taxes at central level as well as state level. In the next topic, we'll discuss. So, what are the which type of indirect taxes are there previously? Among them, how many levied by the central government? How many levied by the state government? Out of the all, how many subsumed under GST? How many not yet subsumed under GST? And non-availment of seamless ITC. And as we discussed, first, for example, manufacturer. Manufacturer pay the excise duty to the central government, and that amount is collected from the distributor. And after the distributor, that excise duty is not transferred, as it is not eligible for claiming VAT credit, because after distributor, no person is doing any manufacturing activity, and they just trade the product. So they are levying, and said state governments are levying what VAT on the respected product or CST. But excise duty is not eligible for claiming against VAT or CST. And due to under this, ITC chain has been broken. And the same is applied in case of VAT and So service tax also. VAT dealers are not able to make the credit of what excise duty charged by manufacturer. Duty paid under excise law was subsumed into the cost beyond the manufacturing level. Like excise duty, VAT dealers were not able to take the tax credit of service tax charged by the service provider on various input services. Okay, and rate structure. And coming to the rate structure, in case of fact, there are number of rates are there. Depends upon the rates are also changed from state to state. Various rates are there, and the uniform rates are not followed in India. So due to that, there is some confusion regarding which rate is applied on the respected product. And these all are what the basic drawbacks in the previous indirect tax system. For curing these all drawbacks relating to the previous indirect tax system, central government come up with the concept of what GST. Okay, then whether so coming to the next one, the seamless flow of the ITC credit and in the previous indirect tax system, one of the major drawback is cascading effect because ITC of means excise duty is not allowed as a set off against VAT, or service tax is not allowed as a set off against VAT, or vice versa. So means ITC chain has been broken after so manufacturing level. So that's why, but those are eliminated. The drawbacks are eliminated by introducing the new concept of what ITC. And as we discussed, GST consisting of three components are there: CGST, SGST or UTGST, and IGST. And before discussing the ITC structure, then first we'll discuss what are the constitutional provisions relating to the GST legislation framework. So the Constitution 122nd, 122 Amendment Bill 2014 received assent of the President of India and became the Constitution 101st Amendment Act 2016, which are paved way for introducing the GST in India. And as we discussed, four types of GSTs are there. First, CGST. CGST is levied as per what CGST Act 2017, and it applies to whole India, including Jammu and Kashmir. Including Jammu and Kashmir. As we discussed, an intra-state supply, CGST and SGST, or CGST and UTGST has been levied. Okay, and SGST is imposed by the state government as per the SGST Act 2017, and SGST also imposed by the respected union territories with state legislation. So how many union territories we have? First of all, coming to the union territories, there are two types are there: with state legislation and without state legislation. And with the state legislation, we have Delhi, Pondicherry, and Jammu and Kashmir. Delhi, Pondicherry, and Jammu and Kashmir. And there, SGST Act is applied. And there, SGST has been levied by the corresponding government. But coming to the others, Andaman and Nicobar Islands, Lakshadweep, Daman and Diu, Dadra Nagar Haveli, Chandigarh, and Ladakh. And these are covered under union territories without state legislation, and their UTGST Act has been applied, and UTGST has been levied by the government. UTGST is levied. So in these union territories, so in case of these intra-state supplier, CGST and UTGST is levied, but in case of this, CGST and SGST has been levied. SGST is levied by 29, 28 states plus 3 union territories. Plus 3 union territories which are having the state legislation. But UTGST has been applied for 5 union territories: Andaman and Nicobar Islands, Lakshadweep, Chandigarh, Ladakh, Dadra, Nagar, Haveli, Daman and Diu. So these 5 union territories are levying what UTGST. So CGST and SGST or CGST and UTGST are levied on intra-state supply. But coming to the IGST, IGST is nothing but Integrated Goods and Service Tax. It has been levied by IGST Act 2017 and it applies to whole India including Jammu and Kashmir and it applied on interstate supply. And IGST is levied by what? Central government. And remember, on interstate supply, we levy the IGST, right? And that IGST consisting of two components. One is the CGST and another one is the SGST or UTGST. So generally, consisting UTGST is also levied by central government because it is under the administration of central government only. So we consider only CGST and SGST. The component of SGST, for example, the product is a transfer from AP to Tamil Nadu, then IGST is levied, and this is consisting of CGST and SGST. And here the CGST part belongs to central government, SGST part belongs to state government. But which state government? So destination, because GST is a destination based taxation. So destination state is nothing but what? Tamil Nadu. Then central government refund or revert back that SGST component to the destination state, not to the origin state, not to the origin state. So that's why we said IGST simply is nothing but the equal to the both CGST and SGST. And these are the constitutional provisions levied by provisions relating to what? GST. Okay. And another one, what are the previous indirect taxes we have? What are the previous indirect taxes we have? Out of that, how many taxes are subsumed under GST and how many are not yet subsumed under GST? So, in case of previous indirect taxes like excise duty, sorry, excise duty is levied based on manufacturing of the good. Service tax is levied based on provision of services. CST is levied on interstate supply. And in custom duty, two components are there like CVD and SCVD. What is meant by CVD and SCVD? Nothing but countervailing duty and special countervailing duty. Countervailing duty is nothing but simply is nothing but it is levied by the central government to counterbalance the excise duty levied on similar product if it is manufactured in India. For example, if you are importing the pen, so then on that importation of the pen, no excise duty is levied as it is not manufactured in India. For example, same product has been manufactured in India, then to that manufacturer, central government levy the excise duty. To then because of that, the price, the domestic product which was manufactured in India is at higher price as the additional tax is imposed by the central government in the form of excise duty to counterbalance that one only on the indirect on the importation of the product. So the amount, the tax rate equal to the local excise duty is levied on the importation of the product called as CVD. Same way SCVD is similar to the CST or VAT which was levied locally. So these are all imposed on imports of the good. And these all are subsumed under the purview of GST, and these all are covered under one definition called as supply. Called as what? Supply. And these all are levied by what? Central government. And coming to the another one, state government also, like what is levied on intra-state supply, octroi, it is imposed on movement of the good, luxury tax, and entertainment. So providing the entertainment, betting tax, it providing on lottery tickets, betting and gambling, lottery tickets, betting and gambling, and entry taxes. Some are there, and these are also subsumed under the purview of GST. And again, these are also covered under the definition of what supply. Okay, and these are all subsumed, but some taxes are there which are not yet subsumed under GST. So, like municipal taxes and entertainment levied by local authority. Entertainment tax levied by local authority. Stamp duties, etc. These are all not yet subsumed under the purview of GST. Okay. And so here, so central indirect taxes is central excise duty, additional excise duty levied under medical and the Toilet Preparations Act, service tax, countervailing duty, special countervailing duty, central surcharges, central cesses. These are all subsumed under purview of GST. And these all are covered under what? CGST. And the state VAT or sales tax, entertainment tax levied by state government other than entertainment tax levied by local. These are not subsumed here. And the central sales tax levied by central but collected by state government, octroi entry taxes, advertisement taxes, etc. And these are all covered under the purview of what? SGST. Purview of what? SGST. And these are the taxes subsumed under GST. And so non-taxable supply. Non-taxable supply means supply of goods which are outside the purview of GST. Which are outside the purview of GST. First, in the definition itself, alcohol meant for human consumption is completely eliminated. And while producing the alcohol, we are using the raw spirit. And the raw spirit used in manufacturing of that alcohol previously taxable under the purview of GST. But if the tax GST is levied at the raw material stage, and while producing the product, the final product is not covered under the purview of GST, and because of that GST become the cost and is included in the cost of that raw spirit. That's why. So from with effect from 1/10/2024 onwards, and the raw spirit, denatured extra neutral alcohol or rectified spirit is also excluded from the purview of GST. Okay. So, and on alcohol, which taxes we levied as of now, state excise duty, VAT or CST are still imposed on the respected product. Along with that, five products are there relating to the petrol, diesel, motor spirit, natural gas, and ATF. These are all not covered under the purview of GST. Actually, the provision says these products are liable for GST with effective from the date notified by GST Council. But till now, no date has been notified by Council. Okay. And tobacco product is liable for both what excise duty as well as GST. And entertainment tax levied by local authorities are not subsumed under the purview of GST. And real estate sector is completely outside the purview of GST as it is a immovable product. And opium, Indian hemp, other narcotic drugs are within the purview of GST, and also they are also liable along with state excise duty also. Both GST and state excise duties are imposed. Okay. So, alcohol meant for human consumption is completely outside the purview of GST. Tobacco product is liable for what? GST as well as central excise duty. Opium, Indian hemp, and other narcotic drugs are liable for what? GST as well as state excise duty. Real estate sector completely outside the purview of GST, right? Okay. And entertainment tax levied by local authority is not subsumed under purview of GST. Then coming to the ITC rules. First of all, what is meant by input tax credit? ITC stands for what? Input tax credit. So, for example, Mr. Abhi purchased the raw material for 1 lakh and GST paid at the time of purchase, for example, 10%. And the total he paid 1,10,000. And here they have to consider raw material cost. So cost of the product does not include the element of the tax. It includes material, labor and overhead only. So raw material cost we consider what 1 lakh only. And for example, processing cost 80,000. Total cost of production 1 lakh 80. And the profit added by the party is 20,000. And the sale price of the product is 2 lakh. And the GST collected at 10%. Nothing but what 20. So 2,20,000 collected from the supply. And remember, whatever the GST collected by the party at the time of sale is called as what? Output GST. So, and this amount will be deposited to the government. But while depositing this amount to the government, whatever the GST they paid at the time of purchase of the raw material. So at the time of purchase, how much amount he paid? 10,000. And the GST paid at the time of purchase of raw material is called as what? Input GST. Input GST is going to be reduced from the output GST, and the remaining only liable to pay to the government, nothing but net GST payable. Net GST payable. The process of reduction of input GST from the output GST is called as what? ITC. Input tax credit. Input tax credit. So here, in case of input GST, in case of input GST, we have input IGST and input CGST and input SGST. And those will be utilized for what? Output GST, like output IGST and output CGST and output SGST. Output IGST, output CGST, output SGST. Input IGST. So the process, what are the rules relating to the claiming of this input tax against the output tax? So our claim are covered under this topic. So input IGST is first utilized against what? Output IGST. First utilized against what? Output IGST. If any surplus we have, if any surplus input IGST we have, that will be used against either CGST first and later SGST, or first SGST, later CGST in the any proportionate. So the remaining amount used against either CGST or SGST in any order or in any proportionate. So first input IGST first will be used against output IGST only, and a balance available if any, that first CGST later for SGST, or first SGST later for CGST, or 50-50, 50% for CGST, 50% for SGST, or 60% for CGST, 40% for SGST, in any order or in any proportion they can use. Then input CGST first utilized against output CGST only. Output CGST. After adjusting against output CGST, if any balance of input CGST we have, that can be used against output IGST. That can be used against output IGST. And input SGST first will be used against output SGST, and the balance, if any, will be used against output IGST. Output IGST. And remember, coming to the output input SGST against output IGST, input SGST can be used against output IGST only after complete utilization of CGST credit. Only after complete utilization of CGST credit. Okay. And remember, CGST and SGST cannot be adjusted because both are belongs to different governments. And ITSC of SGST or UTGST for IGST payment is allowed only after full utilization of CGST credit only. Okay. So these are the rules relating to what input tax credits. And so normal advantages relating to GST, one nation, one tax, because majority of the indirect taxes are subsumed under purview of GST. And the removal of the bundle of indirect taxes like VAT, CST, excise duty, service tax, countervailing duty, special countervailing duty, entry tax, and the luxury tax, and the betting tax, and advertisement tax, and octroi, etc. These all are removed and subsumed under one tax called as GST. Removal of what cascading effect by using the one concept called as what ITC. But 100% is not yet removed because some taxes are there which are not yet subsumed under GST. For example, tobacco product is there. In case of tobacco, GST and excise duty both are levied. And excise duty, while levying the GST, cost of the product is equal to price plus excise duty, both. And it means GST is imposed on excise duty also, and there is also some amount of cascading effect is there. 100% is not yet eliminated. Increased ease of doing the business because prices are reduced, and the lower cost of production increases demand will lead to increase the supply. Hence, this will ultimately lead to rise in production of goods, and resultantly boost to make in India initiation. And these are all what advantages of GST. Okay. And coming to the GST Council, and Article 279A is providing so a joint forum of central and state government has been established called as GST Council, and it is headed by President of India. And why the GST Council has been introduced? Only the reason is so for giving the recommendations relating to the tax rates and exemptions and policy matters, and for mentioning the threshold limits and of how to resolve the disputes if any created, and the GST legislations including rules and regulations, and all policy matters are framed by the council, and decisions relating to the GST policy matters are taken by the council itself only. And in case of GST Council, there are the few members are there. It consisting of what Union Finance Minister as a chairperson, Union Minister of the State in charge of finance as a member, and State Finance Minister, State Revenue Minister, or any other minister nominated by each state as a member of the council. And among these, all one of them is elected as a vice president or vice chairman of the respected council. Coming to the voting rights, so central government will have the weightage of what one third of the vote cast, and the state government is together. All states together should have two-third of the vote cast. Every decision of the central government, see, GST Council shall be taken by at a meeting by majority. Majority means 75% of the, and means special resolution is required. So not less than three-fourth of the weighted votes of members presenting vote, and one half of the total member of members will be the quorum. One half of means 50% minimum should be attended. Okay. Coming to the common portal. So common portal is nothing but it is a company which has an established under Companies Act 2013, Section 8 company, nothing but GSTN, and it is providing one common website, nothing but gst.gov.in, and it is providing common platform to the taxpayers as well as a central government, as well as a state government, and by way of facilitating the registration under GST and filing of a GST returns and forwarding those returns to the government officials and providing the facility of computation and settlement of GST and verification of matching of tax payment and providing various MIS reports to the central and state governments, and they can create any notices if any, and government based on taxpayers written information, etc. These are all covered under all can do by using the GST portal only. Okay, so this is the first chapter. Okay, so relating to the basics of indirect tax. Okay, I hope you guys understand the topic. And on every third day from the today onwards, on every third day, I will upload one new chapter relating to the GST. Okay, just please follow these series, and no doubt, surely you will get minimum 70 to 80% of the marks in the final exam. I will cover each and every topic relating to the GST in this session. Okay, so please like and share this video, and so that it able to reach more number, and please don't forget to subscribe my channel. Okay, thank you.